Alright, Forexia fam, you're not going to want to miss this video. This is an incredible video explaining how these guys are preparing for the market crash and exactly how the short squeeze could trigger the financial meltdown, the entire market crash as we know it, as we've been basically waiting for. I mean, the pandemic didn't cause it. The pandemic didn't really cause any market crash, so we're obviously overdue for some type of market crash, and especially with the rate of inflation and the amount of money that has been printed over the past 2 years. So before we get into this video, comment below, all right? Do you want to win $500 in crypto? All you have to do is comment your thoughts on this video. Only subscribers are eligible to be chose for the $500 crypto giveaway. So all you have to do is comment below. That's all you have to do. Comment your thoughts on this video, and within the next 7 days, I'll choose someone to be given $500 in cryptocurrency. So before we get really into this, we want to go over some recent news. So another hedge fund just went under, you guys. Solis, or however you want to call that. Hedge fund after 11 years of trading. They've been trading for 11 years for clients' funds, and they had to give all their clients' funds back and shut their doors. So they were one of the hedge funds that were shorting AMC and GME. And yesterday, last night actually, just a few hours ago, Citigroup announced that they were selling some of their Southeast Asian assets, over $3.6 billion. They're starting to liquidate their assets. I'm sure they were getting close to a margin call, so they had to start liquidating some of their assets that they have on hand. So to understand exactly how this massive financial crash could come to existence because of the short squeeze, we have to go into what hedge funds consist of, right? Hedge funds obviously consist of portfolios. These portfolios have multiple different assets. Many of these assets are in profit, and many of these positions have expected it to be active, or were expected to be active for months or even years to come. All right, the positions that these hedge funds have bought into maybe months ago or years ago, they have plans to keep them open for years or months to come. Now, these assets will be forced to be liquidated as the hedge funds are margin called. What does it mean to be margin called? Basically, a really quick explanation is that when you have open trades and some of your open trades are in negative, or let's say, for example, the short sellers, they have open trades open, and the trades, the positions, I guess, are borrowed positions, so they have to pay every single day that they keep these positions open and active. So they are racking up a massive fee, trading fees, in order to keep these open positions active. And the longer they keep them active, the more fees they're going to have to cough up in the end. So what is going to happen is that little by little, their liquidity is going to be wiped out. And what are they going to need to do? They're going to need to sell some of their open positions, or not sell, but close some of their open active positions, or sell off some of the stocks that they own in order to cover the margin call that is going on. So this includes everything from stocks to crypto. All right, these hedge funds have very large portfolios, and it's not just stocks. Okay, it's a lot of different asset classes put together. Remember, these are hedge funds. All these positions will be forced closed by the broker once the squeeze occurs, as the hedge funds will have no more liquidity left, which is required for margin to keep the positions in their portfolio active. So what could happen is that once the squeeze happens, is that this could be a catalyst for a massive financial meltdown. Why is that? Because some of the world's top hedge funds are going to be exiting positions in some of the largest stocks, right? In basically the entire stock market. They're going to be closing out their positions that they had open in Apple, in Tesla, in all of these other stocks, the S&P 500. All of these markets will start to crash. Why? Because these massive hedge funds are going to start liquidating their positions. They're going to be forced to liquidate out of these positions. And as the squeeze happens faster and faster and moves more volatile, the price goes more higher and higher, what happens is that this will just keep forcing out more of these hedge funds to be liquidated and basically to close out their positions. So I just want to break the news. This was a few days ago, this news. It was released, a trading report of members of Congress, right? Members of Congress that are just trading, that have beat the S&P, SPY in 2021. So this is obviously considered insider trading. And shortly after the release of this report, a new story started trending. What was that new story? It was an anti-corruption plan by Elizabeth Warren. Okay? What we have to understand is that none of the people in Congress have our backs, right? You know the word pro and con, right? Pro is something good, con is something bad. Okay? When you say progress, it means that you're progressing. It means that it's constant evolution, right? To a better state. Now, if that's progress, what is congress? You see, these people are members of Congress. Congress is what basically leads the evolution of the government, or of, right, the entire United States corporation, the Congress. So it says here, Warren Elizabeth, no one should have to guess whether a top government official is acting in the public interest or advancing their private interest. My anti-corruption plan would ban members of Congress, federal judges, and key executive branch officials from owning or trading individual stocks. Now, of course, this seems like a anti-corruption plan. That's what she wants you to believe. But remember, this is Congress. So it's not for the good of the people, but for the good and for the advancement of private interest. So in my eyes, this just seems like the perfect justification of them exiting their stocks before the crash. Because these people know what's happening in the background. Okay, they make you think, they make it look like everything is just fine, that everything is perfect. But in the back office, right, we know that they are scared from just the amount of FUD, fear, uncertainty, and doubt that they're they're expressing through the mainstream media to the masses. We take that information and we get a sentiment out of it. And we can realize that these people are scared shitless. Okay? So it seems, at least for me, from my point of view, it seems like these people are trying to justify them exiting the stock market before this massive crash, right? What a better way to plan your exit publicly, but make it seem like an anti-corruption plan to get back at these corrupt politicians and give the power back to the people. But in reality, it is the exact opposite, okay? They make you think that they're on your side, but in reality, they're stabbing you in the back. Well, what is my plan? What personally is my plan? I am personally a firm believer in crypto and blockchain technology. I really believe that this is the future. Cryptocurrency could crash as hedge funds are margin called, then rebound as we need a hedge against inflation. So I'm sure a lot of people that invest in cryptocurrencies right now invest in the technology, invest in the fact that it is a hedge against inflation. Right now, inflation is at what, 7%? It's more than ever right now because of the amount of money that was printed because of the pandemic. So people are going to understand that, right? The Fed can just keep printing money and inflating the supply, and what happens is that this just degrades the price of what we can buy, right? And completely inflates our currency. We need a currency that we can migrate to, that is against inflation or even has de-inflation, right? So what I believe is that I believe we can hedge this upcoming financial crisis with the short squeeze. So with the AMC and GME holdings, I believe we are able to hedge this financial crisis if it does come along as we are expecting it to, right? If the GME and AMC squeeze does cause this type of financial crisis, I do believe that it would be a wise idea to hedge against the crisis with your GME and AMC positions, okay? And if the financial crisis happens before the GME and AMC squeeze, I would think that this would most likely trigger the squeeze to occur as the hedge funds start liquidating some of their positions or possibly get margin called from the price degrading in these stocks. So that's it, you guys. Once again, if you want to participate in the $500 in cryptocurrency, all you got to do is comment below your thoughts on this video. Once again, only subscribers are eligible to be chosen for the $500 crypto giveaway. It'll be chosen in the next 7 days. And in the video description, there will be a link to download for free the Beginner's Guide to Market Manipulation. So that's a really awesome book that was personally published by myself, written by myself, and it's free for you guys to download in the description. So, hope you enjoyed this video. Take care, you guys.